Did I only give you the worksheet the other day?
I think I did. No, I had it.
All right. On page 142 in your book, we had a list of the adjustments that we needed to make on the worksheet. When we're working through the worksheet, the problem has to give us some information. We had 4 adjustments that we were making. We made the adjustment for insurance expired. Remember, they gave us very small numbers, so we could just work on the format of the worksheet and not have to be adding and subtracting huge numbers. We also adjusted plumbing supplies. We adjusted depreciation expense, and we adjusted the salaries owed but were not paid until the following month. The adjustment is for the amount used. So if we had insurance that expired and they gave us that number, that's the number that we would use for the adjustment. If they tell us what supplies we have left, we need to take the beginning inventory for supplies, subtract the ending inventory, and then that number would be the adjustment, the number of supplies that we've used. The depreciation, that accumulated depreciation continues to go up. The book value of an item will continue to go down, and the historical cost of an item, an asset, will stay the same on our books. It won't ever change, but the accumulated depreciation will go right underneath that account when we record it on the balance sheet. What kind of an account is accumulated depreciation? A contra asset account. It will always, it's going to take away, it's going to do the opposite of what that asset account does. Accumulated depreciation has a normal balance on what side? On the credit side. So our asset is the debit, accumulated depreciation is the credit. Book value never shows up on the balance sheet, but we can calculate that by subtracting the accumulated depreciation from the asset. Now from the adjustments, we totaled those, and then we have another opportunity to check our numbers again, and it's called the adjusted trial balance. If you look at the numbers in the trial balance and the adjustment column, if you have 2 debits, what do you need to do? We need to add to come up with the numbers that are in the adjusted trial balance. If we have 2 credits, we need to add. If we have a debit and a credit, or a credit and a debit, we need to subtract. And whichever number was the larger number of those 2, then we would put it on the debit or the credit side. So this just gives us one more chance to say all of our numbers, as far as we know, are correct. Can this balance and the numbers and the adjustments be wrong? They can be. So if you if you selected the wrong number for the adjustment and you used, let's say, the ending inventory instead of the amount used in the inventory, your adjustments still balance. This is still going to balance, but when you get over here, it's not going to balance. Someone just texted me from my Peachtree class and said I'm off $1,000, and I think it's in my adjustments. I think they probably reversed their adjustment, or they picked the wrong number. They used the ending inventory maybe instead of what was used. So the adjustments can throw you off. Now the last two columns, and they go in the order that we prepare the financial statements, the income statement and then the balance sheet. As we carry the numbers over, my suggestion is to use a piece of paper, to use a ruler, some type of a straight edge, and just start with the first account, which would be cash, and carry that over to either the income statement or the balance sheet. I think that's the easiest way to do it, and then you won't leave something off. Our book shows us doing the income statement first and then the balance sheet. I think start with cash and carry those numbers over. Remember the numbers that are below the total in this book, and it won't always be this way when you take another accounting class. These are all increased. They had a zero balance on the trial balance. And then we had to use these accounts for the first time to make the adjustment. So these all have an increased balance. This should be on the normal balance side on the adjustment column. Can you list all of the accounts on the trial balance if you want to from the ledger? I told you the other day that you can do that. Some accounting books will show it that way. Either way is fine. I think Slater just points out that these are increased accounts. It might help you with the adjustment because we know if the expense is increased, that's the debit. Because that's the normal balance for an expense account. I know he had a reason for that, you know, why he did it that way. And he asks other accounting teachers to help him when he's writing his book. And this is the only book that I've seen it like this. Some of you have taken other accounting classes. Did you see the worksheet with all of the accounts? Yeah. You know, and that's how I did it too, with all of the accounts listed in the trial balance. When we get over to the last four columns, remember those will never equal. The income statement debit and credit won't equal the balance sheet debit and credit won't equal. But we need to subtract the smaller number from the larger number on the income statement, the smaller number from the larger number on the balance sheet, and the difference between those should be the same number. Now, I gave the demonstration that if it's a net income, it's the outside two columns because we want that great big. If it's the inside two columns, it will be a net loss, and we want the net loss to be small. We always want to add whether it's a net income or a net loss. Always add. Those two numbers, and we need to identify them over there with the net income or net loss, but these two numbers should be the same. Then when we add, our debit and credit on the income statement and our debit and credit on the balance sheet will equal. What do we do with this?
Use that for the financial statements.
We're going to use it to help us create the financial statements. All of the numbers that we need are on here now. Do all businesses have to do a worksheet? No. What was the term that they used in our book? They called it scrap paper. All right, I gave you the sheets for the income statement, the statement of owner's equity, and the balance sheet. This is not anything new. We've been preparing these since chapter 1. So you can either copy this down if you want to. I'm not going to just do it line by line. Look at your heading. It's the name of the company. It's the financial statement, and this is the income statement. And this was for the month ended December 31st, and then put the year. Our book uses, I think now it uses XX because we're into, doesn't have XX instead of just one X, I think. Just put the current year, if you would, even though we're not to December yet. Our revenue is listed first, and it has a little side heading that says revenue with a colon after it. We only had one. You can look at your worksheet to see where that number came from. The plumbing fees. And we don't have to add anything to that. If we had two revenues, we would list both revenues on this inside column and then carry the total over here. But we just had one revenue, so we can just carry it over to the right. This is usually the column for the calculations. It's not really debit and credit on the financial statements. You probably have enough space to skip a line to put the operating expenses. And someone asked if we should say operating expenses, and we should, because all of these are expenses that incurred to help us make that profit. Later on, we could have other expenses that don't have to do with generating income. And we had 5, rent expense, salaries expense, insurance expense, plumbing supplies expense, and depreciation expense, plumbing equipment. Those are listed in the left column, and notice there's a $ sign on the first number in that column. Can you see my single line underneath that? And then label what that number is. It's the total operating expenses.
What underneath that?
No, right above the net income. You see where it just says total operating expenses? And then we put that number over in the right-hand column. And then to come up with our net income, we'll subtract the expenses from the revenue. If revenue is greater than the expenses, we have a net income. If expenses are greater than the revenue, we have a net loss. And just label it net income, and then put your $ sign and your double line. Use your ruler, use your ID card, use your name tent, use a ruler, the side of your calculator. Just make sure they're straight. And that's not anything new from the income statements we've done before. We might have a few more expenses than what we had, but the format hasn't changed. What statement do we do next? The statement of owner's equity. And again, all of these numbers are coming from the worksheet. Look at your heading first, even though I think I have the heading on your paper. On your test, I don't ever put the heading. I want you to write the heading, but we don't get much practice writing the heading because they put it on all of your homework papers. So it's Frost Company, Statement of Owner's Equity, and it is apostrophe S. If we had two owners, it would be S apostrophe, but we just have one. So it's apostrophe S. For the month ended December 31st again, and then the year. You can look at your worksheet to see where we're coming up with the capital for Jake Frost on December the 1st. Where did we get our net income? From the income statement, or where else could it come from? From the worksheet. Now, there's something missing on mine. What did I forget to do? Look at the 3. What should I have done with the 3? Put it in parentheses. Usually when we subtract a number, we put the parentheses around it. Some accounting programs, that comes up in red if you have a colored printer. So we subtracted the withdrawal, which was $3 from the net income. We still had an increase in capital. If we had a net loss, let's say this was a net loss of $10, what would we have to do with those two numbers? Add them. So if we had a loss and a withdrawal, we'd have to add those two together. And then we would subtract the 13 right here. We'd really be in the hole, wouldn't we? If we did, if we used those numbers. Then we'll label that capital, and it's the last day of the month, December 31st. And then put a $sign on that one. Okay? Would you okay? That's question. Did they stop? Oh, good. Sometimes it's they couldn't go. Was your car still able to do it? And then put your $ signs on your new capital. And this is our ending capital for December, but for the new year, that would be our beginning capital. The last statement that we'll prepare is the balance sheet. And I just made a little notation that you need to put that assets and liabilities and owner's equity heading in your balance sheet. Our problems already have it written there. Most of you did that on the test. You wrote the heading, assets on the left, and then liabilities and owner's equity. On your totals, make sure you label that total assets and total liabilities and owner's equity on the right side. I think I forgot my $ sign right there, didn't I? I have some paper. Before you leave today, will you take this quiz for me? No notes, just take the quiz. I hope the publisher did. All right, so I should have the $ sign right there. Try to put your totals on the same line. You can skip some lines in between there to make it come up on the same line. And then look at the heading. Remember, it's the only one that has a specific date, besides the trial balance. It has a specific date, but it's really an informal statement. The balance sheet is a snapshot of what the company looks like at a particular time on a particular day. Do we have any questions on the worksheet and then preparing the financial statements from there? Some of you already started your homework. A couple of you had some problems with carrying the numbers over to the adjusted trial balance. But the more of those that you do, the easier it will become. Mary, I'm going to turn that